Welcome to the Smart MMXM Trader. Welcome to my YouTube channel. In today's video, we're going to be taking a look into gold. This is a trade that I took some time ago. I think it might be 4 weeks or so. And yeah, as you can see from the title, I took a loss from this, but it was a perfect trade. It was a textbook setup. Everything pointed to buying, but then my leverage and my small account could not handle the small drawback because this trade was nearly a zero drawdown trade, right? So yeah, make sure to stick up until the end. Hopefully you learn a thing or two from this, and yeah, and you don't make the same mistake as I did there, putting your leverage to unlimited or so. So yeah, without wasting time, guys, let's get into it. So looking at this over here on the 1 hour time frame, we can see that we had our 8 o'clock candle over here, and we had our 9 o'clock candle over here. Now these two candles tell us a story, tell us what the market is about to do. And when we are looking at them, we can see that we had a low over here from the 8 o'clock candle. And when we stretch, let me just when we delineate it like this, when we stretch it to the right, you can see that our 9 o'clock candle came and swapped the sell side liquidity of that 8 o'clock candle and then pushed to the upside. Now we can see that this candle over here opened, pushed to the downside, then pushed to the upside, closed bullish. Now what this candle tells us over here is that now price is about to reverse. Actually, it's not about to reverse, price is reversing. So we wait for the candle to close, or you can go in trade this candle, but sometimes you find that the next setup, the best setup forms when the next candle forms. So now, I mean, when the third candle forms, counting from this one being 1, 2, and 3. So now when we after we see that we had our sell side liquidity swept, pushed to the upside, closed the candle in closed the candle bullish, we can now go to the 5-minute time frame. Now why the 5-minute time frame? Because of what we call, or what is called time frame alignment. Time frame alignment is just knowing how to align your time frame from your bigger time frame, where you analyze, get your bias from your point of interest from, and when those point of interest are being tapped, you then go to the smaller time frame, which is the from the 1 hour you go to the 5 minute, then you wait for the structure to start to print. So now in this case, we saw that price push to the downside. We had our 8 o'clock low over here, and then we had our 9 o'clock candle sweeping the 8 o'clock low. Now after this has happened, we see price push to the upside. Then we have our fair value gap over here. If I can just do this, we had our fair value gap over here. Now the way these candles are printing, they tell us now that price is volatile and is pushing to the upside with momentum. We can see that these candles are bold, they are not consolidating candles like this over here. If we had a push like this over here, then I would have been more skeptical of taking that trade. But now we can see that price is pushing to the upside. We just have a small candle over here, but then these candles, they push and then end up closing above this candle. Now when I get the close above this candle, I then now call this two candles, that's bearish ones, changing state of delivery, because now was delivering to the downside from this. Price was pushing, delivering to the downside from this consolidation over here, right? You can see that we had a consolidation, then we broke out of that consolidation, then pushed to the downside, right? So now what is happening over here is that price pushes to the downside, taking the sell side liquidity. Then we have a push to the upside. We have our candles here closing above this two consecutive candles that push to the downside, and now we call them our changing state of delivery. After we tap inside of our fair value gap here, we can see also that the candles are, the wicks are respecting, the wicks are doing damage to the downside to below this 50%, but the bodies are staying above. They are actually staying above our fair value gap. Now we have our push to the our aggressive push to the upside. Now remember the pattern that I showed you on the 1 hour chart. I just want you to take a closer look over here. You can see that we had our 5 minute candle over here, and then now the next candle came and swept the sell side liquidity of that candle and closed bullish. Now after the candle closed bullish, we can see that price pushed to the upside aggressively. The same thing that happened on the 1 hour time frame, just over. The same thing that happened on the 1 hour time frame. After we closed above, we had a retracement, then we pushed to the upside. We can see also that we price leaves fair value gap over here, continues to push to the upside. This is the same thing that happened on the 5 minute time frame. we had our we had our candle closing bullish, then our push to the upside. Now since that was a 1 hour time frame and we went to the 5 minute, you can also take it from 5 minute and lower than a minute, which being second. But let's see if we can have our 1 minute. Maybe we might have a setup over here. We just have a push to the upside. There's no retracement into our candles, but something that is more like kind of advanced, you can like take your trade after price closes above this zone over here. Reason being that this would have been your inversion fair value gap. So after we have this inversion fair value gap, you could have entered over here. You could have entered just over here and went with price to the upside. So now going back to where I was, yeah. Our target now after we have our entry over here would have been above our consolidation over here. So we can see that eventually price pushes to the upside and takes those buy side. But now it is not advisable for you to take say you take your trade over here. Say you take your trade over here, you put your stop over here or over here or over here, and then target the original consolidations high. This wouldn't be advisable because price can just come tap inside of the premium being something like this. mm, okay, I don't know what this is doing, but let me just something like this. So your premium will be something like your high over here and then your low over here, the high of the consolidation and the low that price has had formed before printing. So so it will be something like your high over here from the original consolidation to the low that price printed before giving us the setup over here. So now 50% of that range over here, price can just come, tap tap above it, maybe this fair value gap over here, and then reverse, continue to the downside. So these are the kind of areas where you want to take your partials. Like here on the 50%, you can take your profit over here. Can You can take 50% of your profit over here. I heard you. So you can take your 50% of your profit over here, and then move your stop to break even, and then let the other trades run. So this will have been like a good setup, and then like it printed. It's a textbook setup, like the way it printed. We have our consolidation, our distribution phase one, and then we push to the downside. I wouldn't consider this our distribution phase two because of its the way the candles have printed. So I wouldn't have considered it that. And then we have our push to the downside over here, and then our setup, push, continue to push up until we take our profit over here. So I lost in this trade because of my leverage and my small account. But if I had a big account, I would have survived this trade, and eventually I would have hit my take profit. But unfortunately, my account didn't survive, and I blew. But the skill is there. You can see the executions and everything in the video that is going to follow after this. That's it from me for today, guys. Hopefully, you learned a thing or two from this, because if I was you, I would have learned something. Mainly, don't over leverage your account. But yeah, make sure to leave a comment on the things that you want to see, on the things that I must improve, and most of all, leave a like. Above all, make sure to subscribe so that you get notified next time I drop a video. With that being said, guys, this is the Smart MMXM Trader signing out.